experiencing it now with customers that we work with, that you can know it's a lot of companies in the past have just been plucking figures from the air and making up their own figures. So this is also changing. So today we're going to explore how international standards, particularly the ISO 14060 family and the newly released ISO 14068, can help ensure your carbon neutrality claims are more accurate and will be respected. So Peter's going to walk through the ISO 14060 standards and upcoming regulations. Raoul will clarify the key differences between the carbon neutrality and the net zero. And Gopi will walk through the practical steps to implement credible net zero strategies. Later on, I'll return to talk about how consultancies can assist and support in this journey. And then we'll close today's session with some questions and answers. Okay, so I shall hand you over to Peter.
Thank you, Alistair. Hello, everybody, and thank you for joining us today for this webinar. Initially, we're going to have a look at the overview of the 14060 series, and maybe as a background, understand why we need to introduce these and where we're going with them in the future. Originally, the 14000 series, going back nearly 30 years ago, was instigated to allow a global approach to environmental protection and environmental system management. Over the years, that has been brought into play in nearly every country in the world, and it's a standard which allows easy management of these systems. What has happened, unfortunately, in terms of carbon reduction, carbon management, and carbon neutrality, every country and every region of the world has diversified over the years in how we calculate it, how we measure it, and how we control it, and more importantly, how we report it now for the government and global measurement requirements. Fortunately, ISO, along with IAF, over the last 10 years, have looked to develop a standardized system. And this is where we'll have an overview of the 14060 series. It looks at the future of the regulatory context and where we need to look at the various sections of the family of the standards. For greenhouse gas management, there are 3 core standards that you need to know. ISO 14064, which is the gold standard for developing and reporting your greenhouse gas inventories and the organization of that level. ISO 14067, which focuses on calculating the carbon footprint of products, and the one we're going to discuss in more detail today, ISO 14068, which is the newest and defines how to make credible carbon neutrality claims, which is standardized, so irrespective of where the organization is in the world, you'll be reporting at the same level and the same standard. 14068 emphasizes a few things that are not negotiable. The first is the reduction, offsetting, which comes after only deep cuts in operations, transparent documentation from inventory boundaries to methodologies, independent validation, and claims that must be auditable, and defensible. So we're now going to talk just quickly through why that matters right now, especially with the regulatory landscape in the UK and the EU, which is developing very quickly in response to governmental changes over the last 2 years. The UK's net zero transition plans require large companies to publish structured, verifiable roadmaps for reaching net zero. The ISSB climate disclosure, which the IFRS 22 standard is backed by the financial corporate associations, it will mandate climate-related disclosures linked to financial performance. The EU applies to many UK-based groups with EU operators requiring full emissions reporting and assurance. The PPN 0621 requires bidders for UK government contracts over 5 million to submit a carbon reduction plan. And this is where the changes will have a major effect on all smaller SME or even some larger core businesses, because for public sector applications for vendor and contract claims will in the future require this to be fully compliant with ISO 1468. The Green Code claims and the FCA again for anti-greenwashing rules are now in effect, which targets the vague or unsubstantialized claims, which unfortunately has gone on over the last decade as many organizations have tried to manage and create their own claim systems. And again, from 2026, the EU will impose a carbon cost on UK exporters of steel, cement, aluminium, and more unless you can prove your emission reductions, again, requiring compliance with 1468. In this environment, standards like that will just don't help, but they will protect. And with that context, I'll now hand over to Rahul to demystify the difference between carbon neutrality and net zero. Thank you.
Thank you, Peter. That was very informative. So I'll try to explain the difference between carbon neutrality and net zero. So carbon neutrality and net zero, these are two terms that are often used interchangeably, but actually have a slightly distinct meaning depending on the context. The first thing I want to make clear is that for ISO 1406 series, carbon neutral, the term carbon neutral implies quantified greenhouse gases. So carbon neutral essentially means greenhouse gas neutral and not just carbon dioxide neutral, just to be clear. And at the global level, when we consider all the activities occurring on our planet, both the terms carbon neutrality and net zero, according to IPCC, are equivalent. So according to IPCC, when we say carbon neutral or net zero on a global scale, they refer to a condition where anthropogenic or human-induced greenhouse gas emissions are balanced by human-induced removals over a specific period of time. So this balance where the human-induced emissions equals human-induced removals is referred to in ISO 14068 as achieving global net zero emissions. However, when we shift to the sub-global scale, such as organizations or products or territories, then the terms take on different meanings. I can start with carbon neutrality actually. At the organization or product level, carbon neutrality typically involves like offsetting to counterbalance the subject under studies carbon footprint. It means that for a given period or life cycle, any remaining emissions, which is called the residual emissions, according to ISO 14060. So this residual emissions, after reduction of efforts, are offset using verified carbon credits. And according to ISO 14068, carbon neutrality is not a fixed state, but rather a pathway for continual improvement. This means that over time, the organization or product is expected to reduce their emissions and enhance greenhouse gas removal activities with the goal of relying less and less on offsets. Now when we talk about net zero at sub-global level, it's more often applied to territories and organizations, but not to product. That means you cannot say like a product is net zero. You can only claim that a product is carbon neutral. But net zero we can claim a territory, a region, or an organization at net zero. And carbon neutrality is usually like a short-term target, but when you talk about like net zero, it's usually set for longer period of time. Let's say like for 2050 is usually the target for net zero. And for an organization, like achieving net zero greenhouse gas emission means that emissions have been reduced as far as possible, and only residual emissions remain. Those that are unavoidable with current technology or practices. What we have to keep in mind is the technology is still evolving actually. So, right now, we cannot remove a whole lot of carbon from the atmosphere like directly, or we don't have very mature carbon capture technologies. But there is research happening on this field, and it's going to get better, like let's say in another 5 years or like 10 years, because the research is very rigorous now. So these residual emissions can only be neutralized using high quality carbon removal prediction, not avoidance credits. Then for territories, like assessing a net zero claim involves like accounting for emissions and removals that are under the direct control or jurisdiction of that territory. And in many cases, offsetting is excluded entirely from the assessment of net zero claims for territories. That means like when a territory, like or when a region or like a country claims like net zero, it cannot like buy credits from some other place. Like the offsetting or like the removal has to happen within its boundary. Mm. Another important point to note is that ISO 14068, it does not provide definitions, requirements, or recommendations for net zero GHG emissions, whether at a global or sub-global level. It's focused entirely on carbon neutrality, like how you can systematically reduce your emissions. And then if there are any residual emissions, you can offset it with carbon credits. That's what ISO 1468 explicitly mentioned. It does not recommend for net zero GHG emissions. And to close, like my statement, like I'll read out the formal definition of carbon neutrality according to ISO 14068. So it is the condition in which during a specific time period, the carbon footprint that has been reduced through greenhouse gas emission reductions and removal enhancement. And if the footprint is still greater than zero, it is then counterbalanced by offsetting for organizations that that time period is typically a finite number of years, and for products it can be applied to their partial or their full life cycle. Thank you. And now I welcome Gobi to discuss the practical pathways to net zero.
Thank you, Rahul. Thank you so much. So far we have talked about what is the ISO 1406 series standard. So Peter already talked about what is ISO 140641, ISO 14067, and the carbon neutrality standard, which is ISO 14068, which is a 2023 carbon neutrality ISO standard. So now I'm trying to talk about the step-by-step approach an organization can use to achieve carbon neutrality. So it is a pathway towards achieving carbon neutrality. So I'm trying to explain in a way it's a five-step roadmap to carbon neutrality aligned with the ISO 14068-1. So the step one, obviously, it is the inventory management. So any organization, it's knowing your emissions. What is the greenhouse gas inventory and what are your emissions? So we know there are three different types of emissions: scope 1 direct emissions, scope 2 and scope 3 indirect emissions, wherein scope 3 which is very crucial, which is the value chain emissions. So the first step is any organization to achieve a carbon neutrality start with a robust greenhouse gas inventory system. So that is where we can use the principles of ISO 14064-1 standard. The crucial thing about ISO 14064 when we implement is managing the scope 3 emissions, because scope 1 and scope 2 are fairly very direct for an organization to calculate. But when it comes to scope 3, it becomes a bit confusing. So so that is where we have to, I think, adopt a technique or a tool which is fairly common in the ESG world, in the environmental social governance reporting structure and all, which is the double materiality concept. So what is double materiality concept is, when we are going to calculate scope 3 emissions, it's not about putting all our effort and time in calculating all the 15 uh, scope 3 or value chain related emissions. So identifying based on the environmental materiality as well as based on the financial materiality, which are the or what are those emissions which needs to be calculated. what are those emissions which are significant to our business. That is what an organization needs to think about when starting to work on the value chain emissions. So those emissions which are significantly impacting the environment, that is called as environmental materiality, and those emissions that poses risks and opportunities in the financial way. Say, for example, if a value chain emission that can impact an organization through a carbon tax or some other financial aspect involved in that particular value chain emission, then yes, based on that significance, we have to prioritize scope 3 emissions. So that is the step one. So together scope 3 is all about identifying which are those emissions environmentally impactful and which are those emissions financially impactful. So mostly purchase goods, transport, product use, and end of life. These are the most common scope 3 categories which needs to be calculated in detail. Again, as I said, scope 1 and scope 2 are fairly direct based on the data because it's within the organization most of the time. We don't need to rely our suppliers or an external people, external stakeholder to calculate scope 1 and 2. So coming to step 2, which is all about prioritizing the reductions. So now through step 1, implementing the principles of ISO 14064-1, we have now calculated, if we are doing it for the first time, we now have a baseline year data. So based on that baseline year data, the organization can prioritize reduction based on those carbon emission hotspots. So based on that calculated data for an year or for that period of time, uh, organization can understand, yes, these are the hotspots which needs to be fixed. So as I said, as Peter and Rahul already discussed, it's all about reducing first from the organization's point of view. So we have now calculated emissions. What are those possible areas where we can reduce the emissions? So those reductions can be through implementing solar panels, kind of a renewable electricity kind of concept, or if you are into logistics or if your business involves a lot of fuel based transportations, you can think of moving towards a hybrid or towards an electric fleet, and and also optimizing if you are into some your business is more into kind of a delivering items to client sites or towards individuals, kind of courier packaging, things like that. So again, you can optimize your transport, logistics, and packaging kind of things. So these things are step 2. So prioritizing reductions is the second step. Again, it's a strategic decision where to prioritize what reduction needs to be considered. So again, the idea is it's not immediate, but it's a continual improvement. We have already told step by step approach towards reduction and then towards removal. So step 3 would be engaging with the value chain stakeholders. So basically, it's all about an organization collaborating with their external stakeholders, like suppliers, those who are relevant to the scope 3 calculation. So it can be through some procurement policies, it can be through some supplier annual questionnaires. So because if your organization has already implemented an ISO 9001 or an ISO 14001 standard, you will be having something similar to a annual supplier evaluation and performance. So as part of the annual evaluation and performance, you can implement the concepts of carbon emission calculation, or based on the business and organization is having with that particular supplier, what is the estimated carbon. And again, it has to be credible. The information which supplier providing back to the organization has to be very credible. So yes, that's all about engaging with the supply chain. The idea is collaboration is so important because an organization cannot achieve carbon neutrality by its own. It is through this shared collaborative methodology the goal of achieving decarbonization can be reached. So again, double materiality concept, as we discussed already, it helps to focus this engagement so that an organization can target who all are the high emission suppliers and who are those critical to your operation. So high emission suppliers based on the environmental materiality, and financially those suppliers who are critical to your business, identify those suppliers and prioritize and reduce the emissions associated with those suppliers. So coming to step 4, it is all about neutralizing what you can't reduce. So, only after achieving meaningful reductions, an organization can consider offsetting. So, I mean, there is always that concept of, we can start offsetting from now on, or once you calculate it, we can directly go to offset before trying to reduce. So, that is where the concept of ISO 14061 carbon neutrality differs because uh, only after reducing your emissions which within your control of operations, then only you should think about offsetting the residuals. The residual emissions can be offset. So only after meaningful reductions an organization should consider offsetting, and ISO 14068 emphasizes this sequencing. So again, when you go for credits for offset, yes, it is through verified carbon credits that a business can offset. So those carbon credits to be of high dignity. It should be those credits should be of high integrity. It should be verifiable. It should be cancelable on a that frequent period. And yes, the risk of handling carbon credits is so high because we have already discussed about the point greenwashing. So make sure that the credits we use for credits an organization use for offsetting are verifiable and of high integrity. And step 5, which is the last step, yes, now we up to step 4, we have calculated the emissions, we have reduced as well as we have offset. Now it's all about validating what we have already done and communicating to the external world. So it's a claim. It's a claim of an organization that we are running as per ISO 14068, or we are carbon neutral as per ISO 14068 as an organization, or if your product is carbon neutral as per ISO 14067 and ISO 14068 standards. So your neutrality claim has to be independently verified. Ideally using a third-party aligned ISO 14063. So ISO 14063 is another ISO 14060 series standards, which is applicable to verifying bodies or verifying agencies like BSI, SGS, etc. So they are aligned with ISO 14063 0643 standard. So once this verification process is over, yes, an organization can make public claims. They can use this claim to report towards investors or regulators, and they can demonstrate their commitment to the external stakeholders using this carbon neutrality claim, etc. So so when you communicate, it has to be very transparent because there are certain things within the ISO 14064 like setting up the boundaries, setting up the reduction pathways, etc. So you have to be very clear. Sometimes if a business is having multiple entities, but probably for one or two entities only, the claim may be applicable. So when you make a claim, you should not generalize that as a group we are carbon neutral. It is not like that. You have to be very specific which are those entities which falls into the category of this carbon neutrality. That has to be very clearly mentioned. So when you communicate, it should be with transparency. You have to communicate clearly your greenhouse gas boundaries. You have to communicate clearly what is your reduction pathway. As I said, it is not a 1 year approach. It has to be that if you start in 2025, there should be a goal for 2030, and then there should be a goal for 2045 or to the max 2050. So the reduction pathway has to be very clear, and the quality of offset, as I already discussed, the quality of offset needs to be very, very integral. Integrity has to be maintained, and the tools you use. Say, for example, if you are for a product carbon footprint, the life cycle assessment has to be very clear. And if it's for ISO 14061 based organization carbon accounting, yes, the tools you use, the emission factors you refer to, everything has to be very, very transparent, very clear to the verifier. So yeah, so that all comes as part of this verification. So when a verifier verifies this information, he'll go in detail, he or she will go in detail and cover all aspects of the integrity of what you communicate once you become a carbon neutral. So I think uh, that's all for the practical pathways towards net zero. So now I hand over to Alistair to discuss about the possible role of consultancies making UK businesses ready for carbon neutral claims. Thank you.
Thanks, Gopi. That was a lot of information there. It's very insightful. Lots of things that I hadn't realised. So I'm joined here by Gregor Harrison, who has been the owner of TECEMS and has been since 1990, and he's going to talk to you about the role of a consultancy in this process.
So basically, TECEMS was established 1990 after Piper Alpha. So Piper Alpha was a major environmental disaster in the North Sea in 1988. So we started the company to look at management systems and to look at it in a way that it could be simplified. And the company has evolved with Alistair taking a role in terms of looking at the electronic side of the folders and me assisting in terms of the consultancy. So we started working with Quality 9001. We then evolved into 45001 environmental management. We evolved then into occupational health and safety management, and then we link into looking at basically carbon footprints and environmental improvements and carbon reduction. So it's been a practical journey that we've been on, and we're trying to use our approach to assist businesses to integrate the management part into achieving the kind of carbon reductions and hopefully become net zero. So we met with Gopi, I think, in 2024, and we had a project in East Kilbride, which was a company that we had worked with, who then wanted to achieve verified, validated carbon reduction figures. And that project moved forward, and certification was achieved, I think, in May this year. So this was a company that was a company involved in a whole range of furnishing of flats and removing a lot of old products, carpets from the various properties that they were working in, and they didn't have a great deal of information about their scope 3 in terms of what they were buying, what were the figures with regard to what they were buying and how they were removing the end products. So that project started to look at how they managed the various products and services they were offering, and it was a useful journey for that company. Currently, we're working with a laundry in Glasgow, which has quite high levels of energy usage, but it also has a lot of pressure from large multinational hotels wanting them to reduce their carbon footprint, to reduce their carbon impact. And there's a whole load of schemes like EcoVadis floating around, where companies like Radisson say that you have to have a score from EcoVadis to demonstrate where you are in terms of your carbon figures and greenhouse gases. So in terms of what we've been doing at that company in Glasgow, Alistair, you can explain the types of things we've been doing in Glasgow.
Yeah, so it's really just trying to get people on board and give them awareness and the tools that they need to gather the information required to kind of benchmark where we can make the improvements. And that's been quite straightforward with direct scope 1 and scope 2, but also becomes more challenging and more complicated when you get into scope 3 data. So it's trying to guide them with strategies to align with reducing first, and then principles and preparing documentation for third-party assurance. We also align with the key disclosures, the PPN 0621 and the ISSB to CSRD, because obviously in this today's landscape, it's about internal action, not just about external competence. The benefits of this has been getting strong carbon strategies is basically going to win more. They're going to win more tenders, and they're going to be more competitive in the market. So it's been a quite not been a very straightforward process, because it's not what these people that you go and speak to really do as a day job. So it's trying to get them to kind of think outside the box, and before they might just be thinking about quality or health and safety, but now you're adding something else onto their plate where they've now got to think about. So it's been challenging in that sense. But our role ultimately is to support these organisations and to try and provide them with as much assistance as we can to make things, improve.
The laundry in Glasgow have made significant changes by moving away from polythene wrapping of their laundry items. They've also incorporated heat exchangers, which have made significant savings in terms of energy usage, because the energy usage and the price of energy went up through the roof in the last couple of years. So they were looking at ways to reduce their carbon figures, but also to save money and also to meet the requirements of their customers, who were big hotel chains, the Hilton, Radisson, etc. And they're continually putting in questionnaires to ask them questions about how they're reducing their carbon impacts, how they're reducing, how they manage the laundry in terms of environmental issues. So that we're trying to get a balance between benefit to the business, keeping it as straightforward and simple as possible for them to understand the journey, because a lot of these people have very limited additional time that they're focused on getting their job done. And as external advisors, we're trying to do things for them, at the same time getting them to take ownership for what they're doing and seeing the logic of the journey. And again, the kind of what we used to use was kind of carbonfootprint.com type models, which we were basically guessing the kind of what the tonnage was be. In the situation with East Kilbride, we've now got good figures, and the people are very happy with the end report, and they can also see what journey they're on. Based on what Gopi was saying, they can set targets for the next few years to try and reduce their impacts and potentially change who their suppliers are, etc. So it's trying to make it practical, relevant, and also link into the various bits of regulatory requirements is what we're trying to achieve.
Yeah, and we definitely, by using a consultancy, you get there, you're going to get there faster and more effectively, and that's ultimately what we've been trying to achieve.
And I mean, thanks, Gregor, thanks, Alistair. And one more point I would like to add on. I mean, similar to this, what you have already discussed is that I mean, there are some online systems. The problem with these systems are they are not easily verifiable. When you calculate something, when you are submitting it to a third party for verification, there has to have that documental balance as well. So when we do as a consultant, we make sure that if it's energy related emissions, we make sure that do we have the right bills first. Once we have the right information, only we'll go with the calculation. We just don't go with a random assumption. If in case we need to assume, we go with the most scientific way. What has been the figure over the years, and what could possibly based on the scientific assumptions. It's not just a random assumptions, and which is what at the end of the day it matters. The risk of greenwashing is there. So when we make a claim, it has to be as transparent as possible. That is what we try to do. But still, we managed to complete this that particular project within 3 or 4 months' time. Addressing all the scope 3 emissions, which is again an important aspect, because we have to maintain the time as well. Most businesses, they need this, because at the end of the day it is for an year's data we are calculating. So if we can't do it within the time also, it is not worth when you do something. So we make sure that the work is being done within the stipulated time, at the same time the most credible manner, the most transparent manner, and it can be easily verified by any verifier based on the requirements of ISO 14063, which is what we do. Yeah. We have got, I think we have covered most of the points which we decided to discuss with regards to the project we and the lessons we learned and things like that. So we'll start with a couple of questions we received from LinkedIn through live. So firstly, thanks for those who take your time to attend this meeting as well as asking questions. So first question was a question from LinkedIn. If my supplier say his product is carbon neutral, when I quantify my scope 3 emission, can I mark the emission from this product as 0 in my inventory? Yes, you can, but make sure that this is properly, this is not just a claim, but the transparency behind that claim has to be there. So when a product is carbon neutral, it has to be based on ISO 14067 and ISO 14068. So that's when the product is carbon neutral based on ISO requirements. So make sure that you have the relevant verified data. So if it's verified, if it's been internally calculated by the business, and if it's been verified by an approved or an accredited third party, or somebody who is independent, at least if the party is independent to the business, yes, from the emissions calculation point of view, yes, you can include that as 0 in your inventory for that particular supplier and for that particular product. Yes. And how do you currently evaluate the quality of carbon credits businesses use? Yes, there are verified registries for carbon credits. Say, for example, there are certain standards like Vera standard, Gold standard, where it is like when you buy something, you get an identification number and a traceability is there. So you have verify if you have a carbon credits, you can use these registries where you can search for these details, and based on that details you get the validity and till what time this credit can be used, and those kind of information which are applicable for offsets are that can be traced back from the verified the registries like the Vera registry or a gold standard registry kind of thing. Yes. So I mean, Rahul, if you want to add on any points for these questions, please.
No, I think you explained it pretty well.
I think Rahul, your voice just a bit low. Yeah.
Is it better now? No, I think you explained it pretty well.
Yeah. So I mean, yeah. So the second question, especially, yes. Once you start thinking of offsetting, again, as per the ISO 14068, it is reduction and then removal. So offset comes as part of the residual. What we can't reduce and remove. That is where we have to rely on offsets. Yes, transparency and integrity of offsets is very important. So every offset carbon credit you purchase, it's like one CO2e kind of credit. One credit is equal to 1 ton CO2e. So each CO2e emission you purchase, you get a verifiable information, and you can go and trace back that information, and make sure that you use the reputed ones, the ones which are Vera verified or gold standard verified kind of, there are certain standards for carbon credits verification as well. So which is not part of ISO, but what ISO 14068 demands is you have to rely on verifiable integrity in those credits which are having that integrity. Yeah. So, Peter, I just wanted to ask if you have any points to add on at this point. Maybe, yeah, something informative for us. Yes, from a generic point of view.
Just for the two questions that were asked, thank you whoever asked them. Appreciate that kind of information is being asked out there. There are verifiable means. I should mention I do represent IEMA, who is the Institute of Environmental Management in the UK. IEMA can provide information, but from the discussions we've had already today, yourself and Alistair are probably the two best people to help them and direct them. If you need verification for any credits for any vendor, best to use a recognised consultant who will guide you down that path, because sometimes making claims, and when you go, especially if you're a vendor looking for contractual qualification with public or large sector organisations, you really need a consultant support to take you through that process, because some of the information, especially with carbon credits, can be still not properly defined. So it's better, always better, to speak to a consultant who will help you and guide you with the validity of that information.
Yeah.
That helps.
And and one thing I just wanted to add on at this point is, yes, we are in partnership with Tec EMS. At the same time, we are IMA is also a corporate partner of us, so we are in tie-up with IMA as well. IMA helps us to go through the resource wise, what are the latest updates happening. There is a seminar happening this week itself about the net zero things. I think it's happening on Wednesday as well. So, which is something which I am personally looking forward to get to know more about what's happening within the industry, within the sectors, how the UK geography is evolving in terms of new regulations, especially the CBAM, the Carbon Border Adjustment Mechanism, which is going to get implemented in European Unions in from 2026 onwards. That is when I think yes, those products which are coming outside from the borders of European Union towards European Union. Yes, I mean these things needs to be I mean being transparent with the emissions information and all. Yes, probably Peter, if you can just add on some points about how IMA is kind of involved with all these things. Yes, there are certain things which IMA does, but yes, if you can brief some points, it would also be helpful. Yeah.
Well, certainly today we're talking about the ISO 1460 series of standards. IMA, if you go to the UK website, have a lot of information which explains. It doesn't give a lot of detail though in terms of the process and how you go through carbon neutrality or net zero. But what will give you a lot of guidance. It does give a lot of it. Some of it, unfortunately, you have to be a member, but a lot of the information is freely available to everybody, because it is part of the Institute's obligation that we help everybody, every organisation, every individual, to try and achieve our aims to reduce our global impact. So yeah, IMA, go to the website, please, and look through it, and there's plenty of information, especially on the new standards, the 1460 standards. There is a lot of information on that. Please use it. You're very welcome.
Yeah, and also I know I'm a associate member of IMA, so I know there is a CPD, the continuous professional development pathway, and there is a registry for carbon accountants as well. Those who are consultants who can become, a registered carbon accountant through IMA. That's also something which adds validity as an individual if you are somebody who is in the profession of doing carbon accounting, things like that. So yes, I mean, beyond that, yes, Green Analytic Solutions, we support businesses with the trainings as well. So we are planning to implement some trainings in life cycle assessment, carbon neutrality, just to help the consultants as well as individuals representing businesses to understand what's being expected from a third person's point of view. And that is something which we are looking forward to. Yes, as Grigor rightly mentioned, the business should be there first, that then only all these accreditations, all the certifications should come into play. So yes, as things progress, yes, more businesses will move towards this carbon neutrality. Yes, but in a general sense, most businesses, I believe, are into the supply chain emissions management, the scope 3. That is what most organizations are focused on. So that is where the concept of double materiality, identify the right value chains which are significant to a business, be it environmentally or be it financially. So then target, and based on that, develop a proper reduction pathway so that businesses achieve carbon neutrality with integrity by 2050. So I mean that's the ultimate goal. Yeah, yeah. Fine.
Yeah, another thing I want to add is that ISO 14068 also mentioned that you have to document the risk of implementing carbon neutrality the carbon neutrality roadmap to your business. So you need to document that as well. If it has like a financial or like other environmental impact on your business, like you have to foresee that as well when you're integrating this into your business.
Yeah, fine. So, I don't think we have any more questions at this point. Yeah, but just we'll keep 1 or 2 minutes just in case someone wants to ask a few questions. Yes, again, from the Green Analytics Solutions point of view, I would like to thank all of you, all those who have attended online as well. The entire team behind, setting up everything. Yeah, so we try to do this webinars at least once in a quarter to make sure that I mean, yeah, what's happening within the industries, within the sectors, we just need to communicate properly. That is again a part of what we do. Uh, so yeah, so we'll be doing at least one webinars every quarter. So that is something which we are trying to do. Hopefully, yeah.
Just go through one last thing. Again, thanks to yourself for inviting us on today, and thanks for everybody who's attended. If there is any interest in IEMA, I know if you can provide my contact details. For myself, I only cover the west of Scotland. We're part of a steering group, but the whole IEMA family covers the whole of the UK. And if anybody has any questions about IEMA, if you could direct them to yourself, and if you pass them on to me, I'll make sure that the information is collected and passed on to IEMA so they can talk directly to the people who are interested.
Yeah, definitely, Peter. We'll do that. Yeah. Thank you. Fine. So I don't think many more questions because yes. So probably I think we can wind up this session. Once again, thank everyone. Thank you, Alistair. Thank you, Peter. Thank you, Rahul, for joining the
Thank you.
meeting. And thank you, all of you who attended this online, as well as those team behind, setting up all these webinars, going live in a very smooth manner. So we'll see in another session at a different time. So thank you all. Take care. Have a nice evening. Yeah. Yes.